Hi everyone, let's go over my bullish and bearish cycle, macro and high time frame Elliott Wave scenarios on Bitcoin. Starting with the cycle bullish scenario where we're looking for multiple 1-2s, and now we're aiming for this blue wave 1 followed by a bear market in the blue wave 2 and then continuation to the upside. To get a better understanding of why the target area of this blue wave 1 is between 100k and 180k and time-wise between September 2024 and October 2025, we have to look at the previous bull markets. What you see with this yellow wave 1 is that this yellow wave 1 is a little bit shorter in time and shorter in price compared to the red wave 1. The vertical lines are fib times, and the yellow fib time is taken from the start to the high of this wave 1 to the low of this wave 2 over here, comparing the red wave 1 with the yellow wave 1 in time. And you can see that the yellow wave 1 ended just before the 0.786, meaning that this bull market was shorter in time than the red wave 1. Price-wise, this yellow wave 1 is also shorter on the logarithmic chart. This yellow wave 1 finished just below the 0.618 trend-based fib extension taken from the low to the high to the low over here. And the same is true for this green wave 1. You can see that also here the 0.618 is the target taken from the low to the high to the low over here, comparing the yellow wave 1 with the green wave 1. And even though the green wave 1 moved from 3k to 69k, which price-wise is a bigger jump, on the logarithmic chart it is actually a shorter wave, right? Now price-wise it's shorter, but time-wise it was exactly the same amount of time for this green bull market compared to the yellow bull market, as the 1-to-1 taken from the low to the high to the low over here also was the all-time high. Now what is interesting here is that you can also see that the wave 2s are getting deeper each time. The 0.236 acting as support, 382 support, 05 support. So the expectation for this wave 2 would be to move to the 0.5 minimum and potentially the golden pocket. Now because of what I just explained with the different wave 1s time-wise, it makes sense to also look for the blue wave 1 between the 0.618 and the 1-to-1 fib time. This then gives us an area between September 2024 and October 2025, and price-wise you can see the 0.618 is on my chart just like previously, which is around 100k, but just for a bit of flexibility I also put the 786 on the chart at 108k. Now if we then imagine the target to be hit and we take a fib from the low to the high somewhere here in this target box, and we then open the 05 as well as the golden pocket, make sure to also have the logarithmic scale check here checked, right, the little box here. You can see that the target area for the 05 is between pretty much 50k and 30k if we look for the 05 to the golden pocket area, depending on where price will end, right? So we can expect a bit of a deeper retracement in this wave 2 if history is repeating. If we go to the macro time frame and we zoom into this structure over here, then we're looking for the final bull market 1, 2, 3, 4, 5 finishing as a wave 1, 2, and then we're looking for continuation to the upside for the blue wave 1. Now if we're looking for bullish continuation after this low, it means that we need to count a corrective structure in this wave 2, and a WXYXZ can be counted here, which is a very rare corrective structure, especially so on the higher time frames, but it does work in this particular scenario where you have an ABC, WXY, ABC, WXY, and a final ABC to the downside, finishing a WXYXZ, and therefore finishing a wave 2 to the downside, where now we're then looking for continuation to the upside in more bullish scenarios. Now the first scenario I like to show you is a double 1-2 where we have already a finished 1-2 and now looking for a second 1-2 before then continuation to the upside. If you kept up to date with what we're looking for locally, then you know that we're looking for a bit of a wave 5 to end, therefore finishing a wave 1, and then in this scenario we're looking for a wave 2 to the downside, correcting this latest impulse to the upside. The common target area for a wave 2 is between the 05 and the 786, 38.9k to 30.9k, taken from the low to the current high that we have, but if price continues to move towards the upside, these fibs will also move towards the upside. The 382 is a less common target for a wave 2 at 42.2k at the moment, and the 886 is a very rare target for a wave 2. Time-wise, we prefer this wave 2 to end after the 382 fib time, taken from the low to the high as well, currently sitting on Sunday the 21st of April this year. A second, even more bullish scenario is that we already have a finished double 1-2 and we're looking for a triple 1-2. So we have a 1-2 finished, another 1-2 that's already in, and then we're looking for a third one here in blue, right? So you can see also here we're looking for a corrective structure to the downside before then continuation. So in both scenarios, and that's the confluence, we're looking for a bit of a retracement to the downside, and then based on the retracement we can have a better idea of what price wants to do and what scenario it likes to follow. Something I do have to mention is that this wave 2 here is very short in time compared to this wave 1. It did not pass the 0.382 fib time taken from the low to the high, so that is something to note. And it's also a shallow retracement to the 382, which is less common for a wave 2, and the same was true over here. If you take a fib from this low to the high, there was also a 0.382 bounce over here for the first wave 2. So this is of course something that we keep in mind. If we then go to the bearish scenario on the cycle time frame, then we're looking at a finished impulsive structure. 1, 2, 3, 4, 5. 5 waves are in, and we're now looking for another move to the downside in a bigger wave 2. Preferably, this wave 2 is also ending after the 0.382 fib time taken from the start to the high of this wave 1, sitting on the 1st of September 2025. And price-wise, the 0.236 is important, as on these higher time frames, the common target area, being the 05 to the 786 for a wave 2, is not really something that we look for. It's $400 to $20, and just like we had over here in 2015-2014, the 0.236 acted as support, and on these higher time frames, it just works a little bit differently. So the 0.236 would be a very important target, which is 6K, or ending just above the 0.236, as we do have great support just a little bit higher, preferably price not moving below 3K here. Now if we then zoom into the bearish macro scenario, we go to the weekly time frame over here, then what you will see is a 3-wave structure to the downside in a wave A, B, and then eventually a wave C. In this case, this move to the downside is not labeled W, X, Y, X, Z, but more of an impulsive structure, looking for an A, B, C to the upside in B, and then continuation to the downside. The greatest support that we have to the downside is the golden pocket taken from the low to the high, as well as the value area high of this multi-year volume profile, which means that the area between about 11K and 8K is a very important support for Bitcoin, and then we want to see continuation to the upside. In this bearish scenario, you do want to see this big support resistance area flipped once again to the downside. Now we're ranging above, we want to lose it. It's 33K to 28.7K. Lose this level and we could definitely be looking for lower prices to come. If we then zoom into this wave B over here, we're looking for a 3-wave structure to the upside in a wave A, B, and a wave C zigzag, 5, 3, and then a 5-wave move. Common target for a wave B is the 0.382 taken from the low to the high of this wave A, and the common target area for a wave C is between the 1 and the 1.618 over here. Now we are moving above the 1.618 as you can see, and the higher price goes, the lower the probabilities for an ABC to the upside. Now a wave C can at times be very long, even go to the 2.618 or even the 3.618. It's just less common, lowering the probabilities. If I would switch this chart to the logarithmic chart, however, then you can see that now the common target area, being the 1 to the 1.618, is where price is at the moment, right? We're now ranging between the 1 and the 1.236. However, the problem that I have with the log chart here is that then wave B did not even hit the 382, which is very rare for a wave B. So therefore, I prefer the linear chart, turn logarithmic chart of wave B respecting the 382, and wave C now moving above the 1.618. And if we then look at the probabilities of the different scenarios, then on the cycle time frame, the monthly chart probabilities are at the moment neutral, as we are waiting for a local retracement, and the retracement will give us all the information that we need, because based on the local structures, we are looking for an impulse to end. Yes, price can still move to the upside, but we are expecting a bit of a retracement to the downside, and based on the retracement that we get to the downside, we are then having a clear idea of a bearish scenario scenario or the bullish scenarios. Now on the macro, the probabilities are slightly bearish, just because a WXYXZ to the downside over here is a very rare corrective structure, more so on the higher time frames. And if we look at the high time frame, the daily chart, this move to the upside here, the probabilities are neutral slash slightly bullish, because we have a 382 bounce here, which is a bit more common for a wave B compared to a wave 2, but at the same time price is now ranging above the 1.618, which gives probabilities to the bulls. So generally we are expecting a bit of a retracement locally, and that retracement will give us all the information that we need. Based on the retracement, the probabilities of the cycle, macro and the high time frame scenarios, meaning the monthly, weekly and the daily chart, will become a lot more clear. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.